Did it go? Oh, there we go. There we go. Why did that take so long?
Well, when you do these lives, you really don't know what's going to happen. So it's like it could be recording when you don't expect it, which is could be really awkward. Or you can be ready and then you just have this face on and you're like, "Ooh, waiting, waiting, waiting."
Us every live.
Yeah. So
Cool.
so this is harder than it looks, guys. So if you thought about doing a live, you might want to think again. Not just kidding. So what are we talking about today, Mrs.
So
Estrada?
today, we've been focusing a lot on buyers and sellers in our last few lives. And I thought we should probably help out our home buyers out there this week.
I agree.
So, yeah, so we can
Sometimes
start.
we feel neglected, right?
Yeah, we love our home buyers, so we want to give them the love too, and talk a little bit about. Obviously, this is Monday Market Update on a Tuesday. We are on a Tuesday because somebody had to go out of town and have some fun. So
somebody had to get this suntan or sunburn, I should say, suntan or sunburn. So
yeah, I hear
Arizona was hot, guys.
I was gonna say
lower 90s. Yeah.
So what we're still seeing is kind of a little bit of confusion still in the market because there's just pockets where there's just weirdness going on. So I know that Nathaniel over the weekend was competing in another multiple offer situation, and this home was priced what we thought was market, and it was a frenzy. There were a ton of offers on it, and we saw that in a couple price points, but then we have some others in the 300s that don't have any offers, and we have some in the millions that aren't getting offers. And so again, it's just having that market knowledge and the right strategy for wherever you are. It's not I've said this before, just like sellers, home buying is not a one size fits all either. And so we wanted to talk a little bit today about some of the metrics, some of the myths that surround buying a home, and some of the metrics that we make sure our home buyers are following, and want to recommend that if you're considering buying a home, you follow these steps as well.
So where do you think home buyers or just the industry misses the mark?
I think the biggest frustration for home buyers is that the traditional method or the way things have always been done is you get a mortgage pre-approval for a certain price. And we have found in our long careers that doesn't work. For me, that's the wrong way. It's the wrong way to look at it. And that's just the way it's been done forever. And even when we have home buyers reach out to us, they just want to say, okay, so what do I qualify for? What price can I buy? And that's not the conversation that we have with our buyers. Instead, our home buyers are shopping by monthly payment and not price. And we
what's the difference?
Well, yeah, we wanted to talk a little bit about that, because if you go out and get a pre-approval and say your pre-approval is for $500,000, that $500,000 base payment based on the taxes, a random number of taxes, random number of homeowners insurance amount, variable down payment, that $500,000 isn't always the end all be all. Number one, that payment could be entirely too high for your comfort zone. And number two, if you're just looking at 500, but you happen to find a house that might be 525 and it has lower property taxes than what you used for your pre-approval, you might be able to get that house. So for us, it's never a price, let's shop by price. It's a shop by monthly payment. So if you're pre-approved, say in this example for 500,000, we're going to be looking at 450 to 550. And then anything that might fit into there, we run it through a payment to see if it falls into your comfort zone with the taxes, insurance, all of those things, HOA versus no HOA, all those things play into your overall monthly payment. And if something happens to be, like I said, in that 525, but the taxes were lower and it's right at that payment that you told us you were comfortable with, guess what? We're going to go look at the 525 house. But if you're just shopping for that price, then you won't see that 525 house.
Right. So the only two things that are constant when you're looking at is principal and interest, right? But there could be three other things. So there's a total of 5 things that could go into a monthly payment. So first of all, we have principal and interest, right? I'll make sure I don't do the fingers wrong. And then we have property taxes. And then we have homeowners insurance. And then if you live in an HOA community, you might have HOA. So if any of the last 3 are different, which every property is different, right? Could have different property taxes, could have different insurance, and could have different HOA fees or no HOA at all, which would give you even more buying power, right?
Well, and don't forget mortgage insurance, depending on how much down payment you have. If you have less than 20% down payment, there will be mortgage insurance, but that is also variable depending on your credit score and several other factors. So
yeah, it could be like a 6th one, but it's kind of built in. Yeah, principal, interest, and mortgage insurance are kind of like the constant, right? So and once we understand what your down payment's going to be and what loan program you're going to, but yes, that is true. There's 6 different things that go into your monthly payment that you need to be paying attention to. It's not, and to your point, none of those are price, really, right? I mean, price is just, yeah, it comes into play, but it's not one of the factors, right? So it's really what your loan amount is, because that's what you're borrowing, right? So it's your purchase price minus your down payment is your loan amount. So you need to figure out what your loan amount is going to be and then figure out the rest. Property taxes, HOA, homeowners insurance. Does the HOA take care of homeowners insurance? So is that built in? So all these different factors that go into a monthly payment, it's hard to make a hard and fast, like you qualify for X price point. So what we say is there's a range, right? So you should, if you're searching for something, you should be in that range of, $450 to $500 or $750 to $800, something like that. So it's not all about, what do I qualify for purchase price wise?
right, so I think it's a bit of a disadvantage to home buyers to just be sticking and shopping with price. If you work with us to purchase a home, it's a different approach. It's a different conversation. Price doesn't even come into the conversation until we actually start scheduling showings.
Yeah.
Because at the end
of the
day,
it does make it a little difficult, right? To search for a property because everything's, you don't search by a monthly payment, right? You search by price point.
Yeah, and it has advantages and disadvantages because obviously we've talked so much about how buyers have everything at their fingertips. So typically they do go to Zillow or realtor.com or something like that to look. So if you have a pre-approval that says 500, we've had this happen with so many of our buyers. So they're sending you all these properties at 500 and then you have to say, oh, sorry, that one doesn't work. Sorry, that one doesn't work. Sorry, that one doesn't work because the property taxes are so much higher than the area they originally were thinking or whatever it might be. It has an HOA and they weren't quoted at an HOA. So it can also hurt you in that you're spending a lot of time looking at properties that also won't work for you because you are going off that kind of hard rule of I'm just qualified for $500,000.
Yeah, good point. Good point.
Which brings us to the next piece of this. Another number that home buyers need to be aware of that causes confusion for them is DTI, debt to income ratio, which directly speaks to payment and why you should shop by payment, because that payment that you're quoted or that payment that you've been pre-approved for means that your debt to income ratios work at that payment. So I'll let you talk a little bit more about that.
Yeah. So can you hear me okay? My headphones just died.
Yeah.
So what happens is when we look at DTI, sometimes we want to do the math to figure out, all right, does it make sense to put more down payment, or does it make more sense and does it have a bigger impact if we want to pay off a smaller credit card, or maybe you have a smaller loan left on your vehicle, maybe you have a student loan that's almost paid off. So we want to look at your entire picture and come up with a game plan that's going to have the biggest impact on your monthly savings. So we look at the entire picture. Of course, we're going to pull credit. We do a soft credit pull. So that way, can you hear me okay?
Yeah.
Okay. So credit pull, so that way it doesn't ding your credit. It doesn't show up as an inquiry, but it also give us a snapshot on, what are your monthly loan obligations? So what's coming up on your credit report? What are some of the things that we need to tackle to put you in a better position financially to maybe get lower mortgage insurance or go with a different program? We're looking at government loans versus conventional financing. Where's the property located? Does it qualify for USDA? Does it qualify? Is it VA eligible? So we're looking at all those different things in order to come up with the best plan. And sometimes, and then we also want to figure out, all right, if you're saving money to put more down payment, does that make sense? Does an extra $1,000 that you're waiting on, which changes your payment $7 to $10 a month that it's at the current interest rates, does that make a whole lot of sense in waiting for that? Or does it make more sense to try to figure out where can we better apply that money so that you can get into a home now versus waiting and then having interest rates go up, and then you basically have lost all that
savings
impact. What's that?
Savings.
Savings, yeah, that really just got washed out because the market went up or interest rates went up or whatever the situation is. So yeah, I mean, we need to sit down and figure out what's the math behind this pre-approval. Where do we need to be allocated so it makes the most amount of sense for you?
Well, you bring up a good point. I think one of the other misconceptions, one of the main misconceptions with our home buyers is thinking that I want to save $10,000 more to put down. They think that that's going to have a much larger impact than it typically does. Like you said, that's probably going to save them $7 to $10 a month. And so when you have that conversation with them, they're like, oh, well, that $10,000 is going to go way further on paying off 2 credit cards or paying off that car loan, like you said, and that's going to save me $600 a month. And my payment isn't going to go down by $600 a month if I put $10,000 more down. So it really is more of a counseling approach, and it is very scenario based. Everybody's scenario is different. And I love it when we have conversations with our home buyers and we're like, what if you could buy this house at a payment that you're comfortable with and still pay off a ton of your debt? And that conversation to them is life-changing. And we've done it so many times where people are like, well, I really wanted to put 5% down, or my mom and dad or my grandma and grandpa told me that I should put 20% down. Huge misconception in the home buyer world that you have to have 20% down to purchase a home, or that you have to have really great credit to purchase a home. Those are 2 myths. That is not true. But we have so many people who are like, you know what, if I can use that money to pay off multiple debts, then I'm just going to do an FHA 3.5% down, because the savings paying off this debt over here at 20, 21, 22% interest is so much more impactful for me than having more of my down payment tied up in my house that's not working toward that debt.
Yep.
Well, those are the exciting conversations we like to have with our home buyers, because it's become very almost robotic, the home buying process. And there's so many things to consider and discuss, so many variables that really, before you even start searching for a home, you need to have those really in-depth conversations to make sure that you, your agent, your lender are all on the same page working toward that same goal, because it's going to be different for every single buyer.
Right. And if you're a seller that's thinking about selling and buying, you can just substitute down payment for equity, right?
Mm-hmm.
So if you're looking at your equity on what you're going to net out of the sale of your home, where is that better allocated so that you can have the highest impact on your financial situation than just putting all of it down as a down payment? So sometimes that doesn't make a whole lot of sense. So not even sometimes, most of the time, it doesn't make a whole lot of sense, especially if you have some debt out there.
Well, there seems to be a huge disconnect with people having conversations in their mind about, well, interest rates are so high, so I really got so high, which in our experience, they're not. But in today's world, people are saying they're high. So they're like, interest rates are so high, I got to put all of my equity into the next one because my interest rate's going to be so high. And I'm like, but you have 18 on your credit card and you have 9 on your car. Like, talk about high interest rates. Why wouldn't you want to get rid of those first? So taking a more financial consultative approach to home buying instead of an emotional, let's see how far you can spread yourself, I think is imperative.
No, super agree. I think this is a good topic that not enough people talk about, and it's high impact. It's high impact. So so if you're talking to somebody out there, make sure that they're running through these scenarios with you, looking at all of your options, more down payment versus less down payment, paying off debt versus not paying off debt, better loan types, better loan programs, looking at all those scenarios for you, the entire picture, and figure out what's the best option for your specific situation, along with how long do you plan on staying in the home? Is this your forever home? Do you want to turn this home into an investment property down the road? So all those things you guys need to be talking about and thinking about, and creating a plan so that you can, like I say, set yourself up for success right later on down the road. So it's not just a short-term thinking, it's more long-term thinking and trying to put you in the best position possible. So
yeah, I guess long story short, we've been talking about how real estate just in general has evolved and is changing. This is another area where it's evolving and changing, where people are looking at real estate more as a tool than just a stepping stone. And I love having those conversations with people. And just we encourage our buyers not to fall, or just even if you're thinking about buying, you're not actively in that process, don't wait to just fall into the mold of, okay, my credit's 700 now and I have 20% down and I have savings, so let me go buy a house. The number of people that buy a house that fall into that box is very slim. We have buyers buying properties every single day that are all over the spectrum of financial situations, debt, credit, down payment, all the things. So there is not a perfect box that you need to be in to decide now it's time for me to buy a house.
Well, and very rarely do we ever have clients that say, I'm so glad I waited.
Yeah.
That has never come up. In fact, we have it more on the other side where they regret that they didn't do it sooner. So if you're thinking about it, let's get the math behind getting pre-approved for a mortgage and figuring out, what's the roadmap to put you guys in the best case scenario, best position possible. I had a client the other month, and they're in their 40s, and they're buying their first home. And they're like, dang, if we would have just bought 10 years ago, do you know how much better position? They made great money, had great credit. They wanted to put 20% down. So that was very important to them because that's what was ingrained with them. And they could have bought 10 years ago versus paying today's prices and been way ahead, leaps and bounds ahead. So very rarely does it make sense for you to wait. And it's not a sales pitch, guys. This is not me trying to get you into a home today, right? But very rarely do we ever say or ever hear our clients say, you know what, I'm so glad that we waited 10 years to buy a home, or I'm so glad that we waited for rates to come down. It just doesn't happen. You cannot time the market ever. We've been doing this for 27 years. We haven't timed the market correctly once. It's nearly impossible. So, and if you do time it correctly, it's just luck. It wasn't out of strategy.
Yeah.
So I'll get off my soapbox. I tend to do that a lot. It's just like, I don't need to do it. I'm just so passionate about the message. That's all.
No, I get it. I get it. I get it. So long story short, it's like what's the famous saying? The best time to plant a tree was 20 years ago, and the next best time is today. Same principle, guys. I guess our message is, number one, don't listen to the chatter, because there's a lot of chatter in the world right now, and just start a conversation. Curiosity always leads to wherever it is you're supposed to be. Sometimes it's not buying a house. We just had somebody, what was that, last week, 2 weeks ago, and I was listening to you on the phone, and you had to tell them, like, it's not the time for you guys. Like, and they were like, what if we did this? And what if we did this? And what if we did this? And you're like, but I can't, I won't feel good with you doing those things. I don't want you to do that. Sign a lease for another year and let's talk about it in a year. And that is heartbreaking to me, because we do have buyers that come to us that are so excited and they've made that decision and they're ready to go. But when you have that consultative conversation, it's like, yeah, you probably could do this, but I'm going to recommend you don't. That's hard to do, but sometimes it isn't the right time for you. But you have to have that conversation in order to know.
Yep. Love it. Love it. All right. Well, thanks, everybody. We'll see you on the next one. Adios.
Bye.